Good morning, friends. This is Pramod, your guide to financial information and financial path of knowledge. The main points of this week are the American Fed Bank have declared their monetary policy and have declared that there will be no further rate cuts other than this one and another one. This ensured the investors that there will be a fairly constant interest rate, and hence all the foreign institutional investors are taking out money from Indian stock market. We have seen since last week on all trading days, the market is constantly falling. The market is below 200 daily moving average level. This is a crucial psychological level when all the investors are awakened and they fear further grip of bear market. The crucial levels have already been breached, and let's hope it will not be breaching further. Else, another correction up to Nifty of 22,000 level is evident. They are doing this because as the rates declared by Federal Bank of America are pretty predictable, they will be investing there in their home country and they are booking profit in the emerging markets like India and taking their money back. This tug of war is continuing with domestic institutional investors, but since the huge proportion of foreign institutional investors are there, markets are falling very sharply. Also, the we are not able to match the rate of fall by pumping up domestic money. However, we are giving a very tough fight as number of Indian investors are constantly on rise and on accounts of systematic investment plans are also risen. The another important development this week was the fall of Indian rupee vis-a-vis American dollar. This is also a sort of correction. However, this is good news for the exporters, but a very bad news to the importers. Indian exporters mainly are nowadays software companies and IT companies. As they export their talent, their product to the European and American world, this is good news for them because they earn in dollars. However, the importers are not so happy because they will be paying more money. The importing people in India are primarily the oil company because 80% of our domestic oil demand is catered by imported crude oil. As all the major transactions in the world are done in American dollars, crude oil import will be expensive, which will further pressurize the oil companies which are converting crude oil into petrol, diesel and high speed diesel. So it's a mixed bag. It's not a good altogether a good development, but this correction was evident. The last development which took place is on the political front. I will not comment on any political issues, but only comment on the economic impact of that issue. One nation, one bill, one nation, one election bill have been passed in Lok Sabha. This will ensure that there will be no repeated elections of state governments, local civic bodies, and others, which enforce model code of conduct, which hampers the developmental works. It is estimated that around 5 lakh crores will be saved by if one nation, one election is implemented, and this amounts to 1.5% of increase in GDP. The current day government is very ambitious to push this bill. However, the opposition is also have some views and are skeptical about the designs and the implications of this one nation, one election poll. Keeping ourselves intact to only the economical impact of the economical effect of this development, we will be. I am fascinated by the idea that 5 lakh crores rupees, 5 lakh crores will be saved, and GDP will be increased by 1.5%. This will further speed up our journey towards 5 trillion economy, and also we will be moving towards third largest economy in the world. Let's hope what happens. This was the short weekly roundup of this week. Do comment how it appealed to you. Was this content found useful? After many days, I had communicated with you in English language. Share your comments. Share this content to your near and dear ones and friends if found useful. Thank you. Have a good weekend.